Welcome back to a new monthly update from Happy Investors for the investment portfolio. In this new update, we will first discuss a global overview of the developments within my investment portfolio, not only DEGIRO, but also interactive brokers and a number of IP investments that I've made. Additionally, an update on the current buys and sells for this month. And finally, the third part, a deep dive into a few interesting stocks for the coming years. My name is Jorik Vermeulen. Once again, a happy new Westerns. Thank you for watching. Make sure to subscribe if you want to keep following updates on our portfolios. I've been investing for just over 10 years. I started when I was 23. Of course, it started very small, and nowadays it's more full-time, and it's a long journey ahead where I invest in companies, and that includes stocks, but it will increasingly involve non-publicly traded companies as well, with the goal of starting a holding company in the long term. But it all starts very small, so step by step. In this update, we will also talk about rebalancing the portfolio. At the beginning of this month, exceptional results were achieved with, for example, Applovin. It has risen a lot, plus 1000% return in 14 months. I've mentioned Applovin before. I also recommended it as a growth stock within Happy Investors. So many members have been able to benefit from that with a nice high return, exceptional return. And you can see here, the position had risen to 32,000. However, in my current portfolio at this moment, there were only 4,400 for Applovin. That's a big drop. The total return is no longer 1,000%, 600% return. But more importantly, I sold Opnight, so I took significant profits on Opnight. A second example of rebalancing is Hims and Hers. I've had Hims and Hers since 2021. I started talking about it when a lot of people didn't even know this company. And like with so many things, when a company performs exceptionally well according to expectations, more and more people start talking about it, but then it becomes overvalued. It's actually that simple. So the position had risen to 10,000, and the current position of Hims and Hers is only 3,000 at the moment. You can also see that the total return has dropped a bit, and the total profit and loss account is 9,000. That means if Hims and Hers goes down to minus 100% now, I would lose 3,000. But my total profit and loss is still plus 6,000. The same as for Applovin, it's still at plus 23,000. And maybe Applovin and Hims are a new buy the dip opportunity, but we'll talk about that later. First, let's take a look at the overall development of the investment portfolio. When you start your journey with investing, you naturally buy and sell stocks, and at some point you have a number of positions that are doing really well, but you also have a few positions that you still believe in for the long term. However, they are just not doing as well in the short term. One example is Evolutions within this portfolio, which just keeps pulling back a bit, dropping to minus 12%. The concept of rebalancing is actually very simple. For example, you have Applovin, an extreme winner that generates a lot of profits in a short time and is likely to become overvalued or at least have a very high price tag, which means short-term volatility could lead to a significant drop in its price. Well, my assumptions were correct, and I sold a lot of Applovin at a higher price. I'm going to show you that in a moment, but the gist here is that now my cash position has suddenly increased significantly to something like 52,000. So out of the 200k in the DEGIRO portfolio, I now have 25% in cash position. And not only that, I also have a large cash position of 70,000 at interactive brokers. And I've only built up cash in my bank account over the past year because, as I've shared before in the investment portfolio updates on this channel, the market is just getting very expensive. I don't know, it's really hard to say if it's overvalued. That's always very tricky. But as soon as there's a hype, in this case, the artificial intelligence hype, and the valuations keep rising according to us, then price to sales ratios and price to earnings ratios are being paid at above, let's say, 30. And for some tech stocks, well, above 50. Yeah, I start to feel a bit cautious because the experiences from the past show that if you're greedy and you think that stocks like Applovin will just keep rising continuously, then in my experience, at some point, that greed will come at the expense of your overall returns. So sometimes you really have to sell, and that's what I did based on stop losses. I use that very objectively. When he activates the stop loss, he sells a portion. So a portion has been sold, and I've also sold quite a bit of Hims and Hers, and I have a few more like that. What I'm going to show you in the second part of this video is about the current stocks and sales. The result is that my cash position has increased significantly, and I'm not really worried about it. This is just fine for what it is. The same goes for interactive brokers. There's not much of an update to give for the past month. Basically, the portfolio has become slightly smaller by about 0.3%. Yeah, so that's actually nothing at the monthly level. The real estate funds are doing really well. I've also made videos about that since mid 2024 because real estate funds have actually become a bit more interesting, especially due to those interest rate developments and the drop in prices combined. So that's right now, I'm happy with that position, which is about 50% of my portfolio, little percentage in equities and the rest in cash, as you can see. Regarding the top performance from last month, I've often highlighted Kelly Partner Group, a very interesting serial acquirer, still relatively small, which has now increased by 60% since my initial position. And again, this month plus 8%. Yes, everything ultimately just gets more expensive, but it's all about the long term strategy. And rebalancing means, in this case, that if you believe in a company, you should occasionally buy more when it drops. For example, Nutella Performance, yeah, not a super company, but it kept declining, even though I think it's already undervalued. So I kept buying more. The same goes for Teqnion. I keep buying more when it drops, and I'll share more about that shortly. And I think Kelly Partner Group is a very long-term position for me. I would actually prefer to hold it for a long time. So I mean like 10, 20 years, no idea how the company will develop, but the intention is to hold on for a long time. And I really believe in the company. So that's really great when you fully support these kinds of companies. Don't forget, when you buy shares, you become a business owner. In other words, you buy a percentage of the company's shares, making you a co-owner. It might not be how it should be, but that's the way you have to think. And there are also a few positions that I sometimes buy just to play around, like Canadian Solar. That's not a company I would recommend investing in, but I did it anyway. And you can see it's a small position. Vision Properties is a real estate fund, which I've highlighted often in our latest videos on the channel with stock analyses. And Vision Properties is doing really well. Well, which ones are performing poorly? My shipping stocks. I've created a sort of mini ETF for myself with a number of shipping stocks. Here's the buy thesis, which I've explained in the other videos. Also long term, at least 3 to 5 years, maybe even much longer. And there will probably be a big shortage of ships. Probably, you never know for sure. I'm also not an expert in this, so I created a mini ETF with a few shipping stocks. And some are around 2%, so my total position in the shipping stocks is about 10%, but they're doing really poorly right now. This month, they're super volatile. So yeah, you shouldn't look at them too much and just hope they'll be higher in 3 or 5 years, but they do pay out high dividends. That guy, which of course gets added here to the dividend income, that's about Interactive Brokers. Then something I haven't actually shared before is that I also have a position in the facility. Actually, it's such a large position. Let's stop if that kitten means I'm a millionaire, but it's super risky. This is a kind of seed investor in this. There are 3 investors who founded this. I am very pleased with the management, but it's very risky. Well, of course, they are looking for new capital. This is a dust-making company, potentially high recurring revenue, high EBITDA margins, super interesting, business to business. And finally, there is some life in the brewery, but it's still an early start. And the facility is very interesting. I'm going to share more and more about that soon, and I'll ask management if I can also share the numerical developments like revenue growth, um, and that kind of stuff. But whether that's allowed, I don't know. That's still under discussion. What I'm also doing is continuously looking for potential investments, and preferably investments where I can have some sort of impact. Epi Investors is a company in the financial sector. This YouTube channel is about the financial sector. Imagine, for example, I had made an investment in Finley. This is also a kind of financial company. And within my network, I could immediately approach Matthias and say, listen, Finelli might be a good solution for you, and I can refer them as clients. This way, as an investor, you can make a personal impact to help your investment grow in terms of revenue and profit. With stocks like Evolution, yeah, that's almost impossible. Then your impact is very small, partly because these are really large companies with billions in market value, often also billions in revenue. So then your impact is relatively small, but relatively newer companies with actually no or small revenue that are also within your sector where you have a network and contacts. And of course, you can help them grow. Unfortunately for me, Finley didn't work out. I am very selective about which company I invest in. Note that the minimum ticket size is often from 20,000 or 50,000. So yeah, you're not just going to invest money like that, but basically it's the same as just holding your stocks. The only difference is that investments in non-public companies are not liquid, so you have to hold on for at least a certain number of years, and then tomorrow there will be a new exit round where new capital is raised by investors, and then you can sell part of your shares The same will be true for facilities. And then the question is how much capital they can attract at a certain valuation. If that valuation is significantly higher, you might consider selling part of your shares, or maybe even all of them. And of course, another exit option is a complete acquisition by another company or, of course, an IPO. But the latter is really more of a future possibility. So you can think of it as a kind of venture capitalism, seed investor, whatever terms they are, it doesn't really matter. But the message here is that finding that seemed very interesting in terms of the business model, business to business, satellite, potentially a niche leader because they are one of the first to develop certain software. This is actually a white label software to run your crowdfunding platform. So very interesting, but the projections were a bit too optimistic for me. Of course, I received the business case, the financial model. Yeah, well, and let's say with the experiences I've created so far, you can see whether that's all realistic or too optimistic. Let's just say that for me, the feeling wasn't good enough. That's a feeling I do have about facility. So it's super important when you're going to invest in companies. It's the same with stocks. You have to think the same way, is that you have to believe in the management. For example, Evolution currently has the largest position for me, 26,000. Yes, this is what they call a sin stock. It's not really in the popular sector, you could say that, but that's not up to me. This is purely a rational investment. Can it deliver returns, yes or no? And I think the answer is yes. But more importantly, besides the business model and the growth market, you also need to trust the management because essentially you have to invest for the long term and the management has to be reliable for that. So everything they've said in the past comes true or even better, and they also keep their word. Consistency and that piece of trusting management is very important. That's also a reason why I've recently invested a lot in Teqnion, which is now becoming one of my largest positions, and I'll share a bit more about that shortly. All right, then it's time for the second part of the update, namely the purchases and sales of this month. Before I do that, first a couple of announcements. The first is I've been investing with DEGIRO for a very long time, but that might change, and it has to do with transaction costs because I mainly invest a lot in American stocks, and I've noticed that those conversion costs are starting to add up quite a bit. Maybe more on that later. A bigger announcement, who knows? And then we're working with the other party, and we're also going to pull something out for all our happy investors members, in case you're interested. The second update is actually more of a call out about investing in companies, specifically investing in non-sustainable companies. I've explained before that I'm an entrepreneur and investor, and my focus, my strength lies more in selecting smaller companies and investing in them to grow in the long term. And personally, I also want to make an impact. Well, I don't do that alone. I have a team of people who have much more experience than I do, especially in terms of personnel experience. And we are actually looking for potential acquisition candidates for the coming years. So if you're an entrepreneur, you have a proven business with an interesting revenue model, a demonstrable history of resilience, interesting margins that remain consistent, and you're looking for a reliable acquisition partner who truly wants to grow your business for the long term, but more importantly, also wants to help your people grow. That's what we stand for. Then get in touch with me and we'll talk about it. Later, there will be more detailed concrete callouts for that. The update on the purchases and sales will start from the bottom. Recently purchased, again after a significant drop, Evolution. A new position has been taken in the serial acquirer VTech Software, but this is only a small position of just under 1%. As mentioned in the other update, Alphen sold, and here again took a small position from Alphen, made a mistake in terms of estimation. And this was also the most important lesson for me. I stick to what I am very good at, namely strong growth shares with asset-light earning models, potentially scalable earning models, and that is really my strength. And all excursions do not go well, such as Alphen, but Alphen really still has the potential in the long term. So I have not closed my entire portfolio position. I still have a small part to make up for my loss, but yes, stupid mistakes, and you learn from them. Only I am not ashamed of them. That is why I certainly like them. We have Neste, which is also a big mistake. I should have emphasized that more in the previous update, and I sold it completely because the management just scrapped it. And my thesis was that I was investing in this company that was undergoing a turnaround, which has launched larger projects, for example, in Singapore and also in Rotterdam, where a very big project is about to start. However, those costs have increased. The CEO has been replaced with another one. A lot of investments are being put on hold. Plus, the 8% dividend has been scrapped. And my thesis was I would hold on for 3 years to wait for that turnaround to go in the right direction. But when the dividend is scrapped, then it's what they call dead money. So it's a shame. This was indeed an expensive mistake. So yeah, we have to live with that. But fortunately, it's being made up for by all the winners. Then a big significant purchase of Teqnion. As you can see here, a significant position has been expanded, and Teqnion has now become one of my larger positions. This is a company with a market value of 250 million. So that's actually very small. And a full update and rationale behind the purchase of this company I've shared in another video on our channel. So if you want to see that, definitely check it out. More recently, and not yet shared, is the addition of Powell Industries, albeit in very small percentages. And here we also see a new purchase of Powell Industries, a company that has significantly dropped based on news. Powell Industries or creates electrical solutions for industry. Well, it has a lot to do with data centers. And then, of course, the news about deepfake came out. By the way, a position I've held for quite some time is in Chinese internet stocks. So the news didn't hit me very hard, just specifically for the stock Powell, which I bought somewhere around here. It was quickly up about 20%, but since then it has dropped by 30%. Yeah, that's part of it. It's a small company too. In the meantime, it has been reduced to a small cap stock. Only Power Industries has solid management, interesting growth market. And I don't think that I'm not worried that my current position, which is now at least 26%, can't turn into a big profit in the long run. So yeah, you see the risky position I'm taking. In particular, those are small cap stocks. I'm a good investor, as I've explained before. And yes, in the short term, it's often hard to gauge, but then you see that volatility can go both ways. Powerwell Industries is an example that is doing poorly. Other stocks like Applovin, for example, have gone up 1,000% in 14 months. And so I've sold in several. Celestica, for example. But those stocks, those profits more than make up for the losses. So that's what it's all about when it comes to investing. Well, I sold a very large position in Hims and Hers, a little over $6,000. And actually, it's 75% of the stocks that I had. Why? This is simply just a stop loss. I'd set it at 55, but it sold at 53. And the same goes for Applovin. I sold the largest position here, 45 shares at a price of 460. Let's take a look at Applovin to see if that was a good choice. In terms of stop loss, Applovin has dropped incredibly. Let's set it to daily level, then I can show you better. And it had been rising after a very long time. It had only been on an upward trend. So let it be clear, this was a great investment. I actually need to zoom out a bit since 2023. We've been in it December. So somewhere around here in December, a bit here, oh, it's more than 1,000%. But I bought twice, also around here halfway, which I've mentioned in the videos before. But now it's dropped a lot, and the valuations just keep rising. Yeah, and then news comes out like deepfake, and now there's also a kind of short report. Those short reports often make no sense at all. Applovin is a fantastic company, really amazing. The price had just gone up, and I had set the stop loss. And at a price of 64, it got activated. And since then, it's down 28%, and that's just in 6 days. So in a week's time, more than a 30% drop. And in 2 weeks from this peak here, the stock has fallen by 35%. By the way, Applovin isn't the only company. D2 Desk, coincidentally in the same sector, a potential long-term competitor for Applovin, has also dropped a lot. D2 Desk is really a fantastic company, a great CEO, a very good CEO, maybe one of the best there is right now. But the stock has dropped by 47% in a relatively short time. You see, I've set up a tweet alert for myself. Hopefully it will reach this price level, preferably even lower. And then maybe I could take a new position in that tweet desk. But you can see that my sales of Applovin at the price level of $64 and later a few more at $440 were actually good choices. And now the question for me is, am I going to step back in? I also sold my shipping stocks, DHT Holdings and Frontline. No specific reason, but that's because my positions had actually increased after buying in a few times. And I have the shipping stocks in my Interactive Brokers account, which I showed at the beginning of this video. So I actually just want to downsize my total position a bit. Also because cyclical movements are happening and shipping stocks have done great in 2024, but are starting to decline now. I sold part of Zeta Holdings the day before yesterday for 19 euros because the whole situation with Applovin and Zeta Holdings is also a marketing company. Yeah, it's definitely a downward trend. So even if Zeta had presented a great quarterly report, it would probably still decline. and that was kind of speculation, but I was right. And what did I do? Today, I bought back into a new equivalent position at a lower price, just simply trading on a very short-term basis. I'm not an expert in that, it's just luck. I just wanted to lower the position a bit at first. Only the numbers from yesterday were actually that good. I think Zeta Holdings is just an interesting long-term investment with an emphasis on the long term. So far, the management is reliable. Everything they said is coming true. So for me, there's no reason to believe that the expected earnings for 2028 that they've reported won't come true. And these are not exaggerated assumptions. Earlier in this video, I already talked about the silent investments I have, for example, in Facility or Finally. And finally, the business case was so promising that they are suddenly going to realize an EBITDA of 2 million with minimal effort. That's obviously a whole different order size than Zeta, which realizes billions. But this is about the assumption of the assumptions, and those assumptions from Finity were just not good, not well-founded, whereas those from Zeta Holdings are indeed well-founded, and you never know how things will go. In the short term, Mr. Markets do crazy things, but in the long run, I think Zeta Holdings has interesting potential to grow. As a closing note, here are a few positions that I think could be good long-term investments. It is obvious that I have a lot of faith in evolution, but I have already talked about that extensively, so we will skip that. Hims and hers could possibly be interesting to consider getting back into, but I'm waiting a bit for the short-term volatility that's happening here. And Applovin, after a significant drop, the current price is now much lower than my selling positions. It might be interesting to consider getting back in. Only I am also waiting here, in this case, just like at Hims and Hers, for a while Mr. Market does. By the way, I'm not in a hurry. If they all start rising again from this price level, yeah, who cares? I have free shares of both Applovin and Hims and Hers, and that's it. Moreover, at Applovin, I am also increasingly wondering, because the most marketable rose to over 100 billion, could this company outperform the Invesco QQQ ETF in the long term, say over the next 5 to 10 years? And the question should always be, can they achieve high returns as an individual stock compared to an ETF? And also in relation to the risk profile, I'm doubtful about that, so I'm not sure. It's also interesting to highlight Teleperformance. Yeah, it took a while before Teleperformance went up for me, and that's why the position has also increased a bit. We did talk about rebalancing in the introduction. What does that mean? And the same goes for Pasaguro and Stoneco. You basically just keep buying more whenever it drops further because you believe in the long-term potential of the company. In other words, you think the company is undervalued compared to its intrinsic value, that it will be worth more in the future than the price you are paying now. So price is something different than value. So that's a very important difference. I often emphasize that. Before I do that, just a quick update on Teqnion. So that's now risen to, quite a larger position in my portfolio. Maybe the only regret I have is that it was set at around 150 or 145. I bought for maybe I should have bought more. But yeah, it remains a small company. You never really know what's going to happen with it all. But hey, money is just money. Well, let's talk about Teleperformance and also Parseguro. I actually want to show that sometimes it's just hard to determine when to take your first position. And we use factor analysis and genius analysis as tools. I only decide to buy based on a lot of quantitative analysis. And that's the crucial question. Is the price far enough below the intrinsic value? And do you have some form of margin of safety? I'm not claiming to be the best person to do this because I'm a risky investor who mainly invests in growth. That means I sometimes or often want to pay a premium for the future. But Teleperformance is a different story because to me, Teleperformance is a value stock, a different type of stock, not really a good stock. At first, I had taken a position at 790, and you can see that afterwards I just bought in twice, but for a smaller amount, a kind of dollar cost averaging. And if you look at Teleperformance, it just has interesting upside potential while the risk is relatively lower. And I've mentioned this stock before because it has dropped a lot due to various developments in artificial intelligence. I actually think that management can benefit from this, and I'm also quite positive about the acquisitions they are making and have made. So I think the market underestimates how far this company can rise, and the forward price to earnings ratio is relatively very low, just 6. So instead of paying a premium with a price to earnings ratio of 50 or 40, here it's only 6.5 times next year's net earnings. So that's really not much. Looking at the upside potential, With a price earnings ratio of 15, that means an average return of over 40%. So that's obviously a lot. Moreover, in the past, they paid a much higher price for talent performance, which, by the way, is the market leader in call centers, and its potential could still increase further. I'm not trying to say that it will all work out, but it's just that when the price is very low and possibly below intrinsic value, which I think is the case, then you actually don't have much risk. So maybe I should have bought in more, but I also don't think it's a great company. So a position of 5% is enough for me. The same goes for Paxoguro and StoneCo. Those were actually bad investments on my part in terms of timing, but here, macroeconomics plays a role, and these are companies from Brazil. Yeah, super volatile market. I thought I had paid a good price around the price level of 13, but it turned out not to be the case. And along the way on this journey, the first was at the beginning of 2024. I just buy a little bit each time. Not much, just a little, which reduces your average purchase price. And the same goes for StoneCo. A bit of a similar story. I kept buying more at lower prices. Actually, I bought a bit too much of StoneCo in my enthusiasm, but both StoneCo and PagSeguro look just fine. They're just solid companies, relatively small companies. Of course, there is strong competition from companies like New Holdings, but the market is so large that even if they are mediocre, they can still grow just fine. So I think that these stocks, yeah, with low price earnings at the moment, and you see the EPS estimates, well, let's say they can achieve 5% EPS growth. Even with a lower multiple, the return could still average well above 10% overall. So my first entry point was terrible, but that's in hindsight. I actually bought after a strong momentum compared to previous years, and even then it was still undervalued, and I bought because the momentum had also increased, and momentum is indeed a more important factor in some cases. Unfortunately, the momentum has faded. So yeah, that's a bad entry point in the short term, but I'm not too worried about the long term. Moreover, you see here the price level where they are currently paying around 10 euros, $10 per share for Paxoguro. It used to be $60 per share. So how can there be such a big difference in just a few years? Well, I think it's a combination of sentiment, macroeconomic developments in Brazil, like interest rates, for example, and also just a bit of focus on America with higher valuations. And I think it's just a matter of time for Paxoguro and StoneCo that in the long run, and I'm talking about the next 4 to 5 years, yeah, that their price will be significantly higher than the current price level. But yeah, we need to be patient. And at this moment, I can only show that I'm at a loss. StoneCo is still down 30% and Paxoguro is down 22%. So I hope that in 3 years, I can make an update where it's up 100% or maybe even much more percent. But until then, you need to be patient. Thank you for watching. If you have any questions, let me know. And I would say see you next time.